Thomas, welcome back.
Thank you. Nice
How
to
are
be
you?
here again.
Yeah, good to hear your voice. And gosh, so much happens between the time you and I talk to each other. And you were right. You said that by the next time you were on, that there'd be a taper announcement, and there is. Market has weakened. Equities have weakened over the last 3-4 weeks. Tried to recover about 61.8 of its losses, and it's heading down again. So what's on your radar right now, buddy? And are you going to share your screen?
Yeah, I'm going to share my screen. Actually, I called for the tapering announcement at Jackson Hole. So I was partially right, because the ECB announced it in the 9th of September. But yeah, thank you for a kind word. They count.
All right.
So
My memory isn't as good as I delude myself that I think it is. So all right.
Yeah, okay, but I was close. So what I'm gonna, yeah, close enough, I would say.
All right.
Yeah, what I'm gonna do now is
government work anyway. Government work.
What we are currently looking at is this is our outlook for the month of September, which has not gone out yet. There's growth forecast and stuff like that. But what we are looking at now is shown in this. Oh, why is that? What is that?
Are you going to show how credit spreads have blown out in China?
No, actually, I'm not talking about credit spreads. I go to the economy where the problems come from.
Okay. All
so right. The thing is that the credit impulse in the global economy, which basically measures the change in bank lending with respect to GDP, has fallen off the cliff in recent weeks or recent months.
Yeah,
and they come from two sources. First, this is the cumulative aggregate finance in the real economy of China, and the line here is the one we are now on, and this is the line from past year. So China is deleveraging, and that's behind the problems with the Evergrande, for example.
Right.
So land prices in some places have collapsed for 50% year over year. 50. Okay. So from where Evergrande came, there will be more.
Yeah, the cockroach theory. There's more than one. Let me ask you this, Thomas. Besides it being a financial event, it's almost strategic. I mean, it is self-inflicted. These are policies that are driving this deleveraging, not some type of financial accident that happened, and the fuse was lit intentionally. Starting with, going after CEOs and the multi-billionaires in China.
Yeah.
So let me ask you this. What is China's intention? And I don't think it's just control of their own people. I think that they're intentionally trying to begin or accelerate a credit crisis to take our markets down, because that's how they could hurt us financially. And their people are more used to austerity.
Yeah, that's true, but that's one angle on it. But the second one is which we have been discussing a lot with the people who study China, for example, in the Bank of Finland. And there is a fear. There's a historical kind of a law that China will go through some serious political crisis every 70 years. And the leaders in China know now that the massive, the economy is so indebted that it will implode at some point. And what they're trying to do is balance between the economy crashing and the economy going over the cliff. And what they are mortally afraid of, and we agree with many of the China scholars, is that if the economy crashes, there will be a rebellion. Full rebellion, and they will lose their power. So they are doing everything they can to control the society as much as they can, and then they are trying to keep the economy from going out over the cliff, and that's why they're doing these deleveraging efforts. They're trying.
Okay, so is it like a controlled demolition instead
Yes.
of letting the bill. Okay, so they're trying to manage this deleveraging,
Yeah,
which
which they
really
have
is
created. They have created a massive problem, and they are trying to manage it
good luck.
without everything collapsing. And I don't know. We haven't really analyzed
They
it.
think they can manage their currency. Maybe they could do that. I don't think they could manage a credit crisis, a debt, major
They cannot.
defaults.
They cannot. No, that's something. But they are trying to get the leveraging under control. That's the idea. That's our view now. So they have the domestic issues weigh now much more than an international or foreign issues. That's our view now.
Okay. All
So,
right.
but we'll see how it plays out. But our call for the Evergrande is that there will be a debt restructuring and possibly chopping the company to several pieces sold to either private or state-owned corporations. So no actual bankruptcy, but some kind of a debt restructuring. That's our call now.
Okay. Well, the market might celebrate that.
It might, but it's the thing is that there are so massive number of leverage, developers and there's real estate, companies there. So we don't really know what will be the reaction of markets, actually, the bondholders, when they start to look at the macroeconomic figures which are deteriorating, and then they start to think, will my bonds be cut too, like the principal would be cut? So we don't really know how they react. So that's the thing, and we don't think they are able to go the full bailout, because that would just show that keep on piling the risk and we will bail you out. So there has to be a punishment, but it's really difficult to say how will the Chinese economy and the Chinese bondholders really take on it. Let's remember that the real estate is about 30% of the GDP of China. And it's now collapsing. So it's taking with it a large chunk of these corporations, developers, and banks too. So
everyone's long real estate in China one way or another.
Yeah.
Let me ask you about this, because people are kind of whistling past the graveyard about China. And I remember back in 08, 09, they weren't as damaged by the recession. They didn't hold a lot of toxic paper. No. They were still growing. And back then, economists would say, well, China's going to is still an engine of growth that will help pull the rest of the world out of recession. Now, whether it was the Fed and China helped, you can't have it both ways. So if they're 1/3 of the world's GDP, and they're going through this type of crisis where asset prices are collapsing 30 to 50%.
Yeah.
How about this? They used to say when America sneezed, the rest of the world caught pneumonia. So can we say if China has pneumonia, there's at least a sneeze coming from the US?
Yeah. Probably, most likely. But the thing is, like you mentioned, that they got away from the 2008, 2009 crisis. This is the reason why. They put on they drove a massive credit bonanza. So this is like, if you look at this, these are completely unsustainable. The debt is going to the moon, and the GDP is lagging. So this is how they have done it for the past 10 years.
What do you think about the move in yields that we've had in the last week and a half?
Well, I think it's just a sign of things to come. Okay. If everybody starts to taper and the issuance of new credit in the global economy falls, well, you will have problems. They'll probably start at the junk bond yields. And then, that's a sign of things to come. The only question is, can the central banks control that or not? So will they stop it when they see what is starting to happen?
You mean, will they stop a taper or even start the taper?
Yeah.
and go back to QE? You
Uh,
think that's what's going to happen? Is that
well, the taper,
several months
yeah.
into it?
Yeah,
they
but
have to reverse it?
taper doesn't mean the end of QE. It just means
No, it doesn't.
slowing down the purchases. That's what.
Right.
Yeah.
Right. So they'll
But
never get to tightening, will they?
Never ever they will get to tightening. It will be a crash. Like they tried in 2018. They really tried to shrink the balance sheet, and we know how that ended.
Powell got spanked.
Okay.
Both Bernanke and Janet Yellen put him over their knee and said, "You have to lower rates."
Yeah, and
he's been a good boy.
He's been a very good boy, and then
now he's he's on his way out. He's going to taper.
Yeah, probably so. But the other thing is that the when people talk about the strength of the U.S. economy, this is the credit impulse. It measures the annual change. Like I said, the annual change in the newly created money or credit, basically bank loans. Yeah. And it is collapsing now, as you can see.
We're almost back to 08, 09 levels in the.
Yeah.
Wow.
Yeah. That's something that really caught my eye when there's about 3 hours ago, I calculated this and noticed that it's collapsing. And so the US economy is not so strong as they make us believe. And if the economy is slowing, credit impulse is slowing, asset markets at all-time high. So this is a really, really bad combination, actually.
Yeah.
So there you go. Yeah. I could show also a few other figures from other reports. It's coming out.
Tactically, are you surprised at the dollar's strength?
Here? No, because the dollar always, when there's.
I know you were a euro bear a long time ago. Does that come back on the table?
Yeah, it is. It actually is. So the thing is that I could show a few figures on that.
Yeah, go ahead.
So this is the.
I wait 3 months to see your stuff, so I'll just shut up for a while.
Okay, well, this is our quarterly report. It's coming up to week.
Yeah, it is. All right, go ahead, bro.
Yeah, I will. And let me see what's in. Yeah, this is the government debt to GDP ratios in the Eurozone.
I don't see it. You'd probably have to do a new share if it was on a different screen.
Okay, I put it again.
All right.
Yeah.
How about gold's weakness during all of this?
I don't know. I don't know. That's really strange. We are just, the inflation is speaking. I don't know. We don't actually understand what's driving.
Maybe China's selling.
Could be some big, like, elephant selling. That's very, really possible. Yeah. But I think when I talk about the Eurozone, if you look at these are the government debt to GDP ratio. You see it now?
Yeah.
Yeah. So, and these, there's like Italy is here, the red one. And it came down only marginally.
Right.
Same in Portugal, all this. And now they are, heading up really fast, like Greece. It's back over 200% of GDP, about 220 at the moment.
It's worse than it was during their crisis.
Worst. So the Eurozone is at worst. Yeah, the crisis was here. It was here. This one, this piece is the crisis. Wow. Yeah. Just think about it. Now we're there.
So if the DAX ever takes a 20-30% hit, Europe's in trouble.
Yeah. And if you just think about these levels, these debt levels, what happened when now the ECPs, because the ECP, there's only one thing in the ECP's mandate, and it's price stability. There's nothing else, basically. So it's all that, and it's the price stability is tied to the, it said something that price stability is the best driver for the overall economic growth or something like that. But it's all about price stability. So when the price is rising like they're rising really fast in Germany now, like producer prices over 12%, 11%.
Natural gas. How about you guys? You paying more for energy?
No, we don't really use gas so much, and we have Russia. We get cheap stuff from there.
Okay.
And we have
Russia's going to have more leverage this winter than many winters prior.
Yep, they are going to have it. Yeah, they can if they want to turn nasty now they can. Now they can because the Europe is really in trouble. But just now the ECP tapers. And these massive debt levels, the yields will start to rise. So I don't think there's very many investors who wanna lend to Italy for 10 years with the rate of 0.7%. I don't think there are any such people here, for example.
Who's doing it?
The ECB. It's buying it has been buying the whole net issuance, and when you buy from the the bond,
So they've been doing what the Fed has been doing.
Yeah, but in a larger scale even. So I think we have the balance sheets here, and these are balance sheets of major central banks, and the red is the ECB.
Yeah.
So that's close to 9,000 billion US dollars.
Wow.
Yeah, these are not like, and it's, I don't know. I'm an economist. I just cannot understand that all this. Okay, I understand what they try to do, but this cannot end well, in no way.
When I look at that, I look at China. They've been more disciplined.
Yeah, they've been. The People's Bank of China has been, but if we look at let's see where it is.
So what do you do tactically here? Say finally a lot of the things that people were worried about start to manifest.
Yeah, I would buy gold now when it's cheap.
Buy it now.
Yeah, and hold the US dollar at least as long as before before the crisis really hits US.
Okay, so for a while, U.S. will be a safe haven. That's why they'll buy dollars.
And I would be extremely careful of holding a large long position in euros, because this is not stable. Euro is not stable at the moment.
Okay, are there any other fiats besides the dollar you like? Aussie,
Swiss franc.
Okay, Swiss. Yeah. Okay.
Yeah. So the classical, the very classic.
You're a gnome. You don't live there, but you're a gnome.
Yeah.
You know what a gnome is?
And actually, now I started to think, no.
It's I don't know. They're from Switzerland.
GNOME. Yeah. Oh, yeah. Okay. Yeah. Okay.
Only you live in a different country.
Yeah, I do.
Yeah.
But the thing here is, if we come back to China, here is the share of non-financial sector credit to GDP or debt to GDP. Basically, this is all institution excluding the government. China's here.
Wow, 230 compared to we're at 150, 160.
Yeah. And where Japan was when they had the major financial crisis. What was the level then? It was about 210.
When who had the crisis?
Japan in the early 1990s.
Oh, okay, 89.
Yeah.
Way back then.
Yeah.
Okay. Where the emperor's palace was worth more than all of New York real estate.
Yeah, basically. Okay. Yeah, it's an insane bubble. And they had like 211 or 210% share of non-financial sector credit to GDP.
So what do you think this takes? It's starting now and, probably intensifies into the spring.
Yeah, into the fall, actually into the Christmas, I think. Into
Christmas, huh?
Yeah.
Okay.
So it will get worse. But this is the thing, that China has to cut this. They cannot. This cannot grow very further anymore. It becomes impossible to control anyway. So that's
with their markets being under pressure.
Yeah, that's the reason.
Yeah. Okay. The F.A.C.E.
Yeah.
And what is it? Did credit spreads really blow out from in China up to like 14%?
Yeah, they did.
Is that the highest reading you've seen in your career?
Well, 2008 there was some really crazy figures too, but these have been big. So the same thing. So China is teetering on the edge of a financial crisis, that's for sure.
Yeah. Engineered,
but they engineered they created it, and they try to but it's engineered.
They're trying to manage it.
Yeah. So, but it's we're coming a really interesting point here globally. Really, this is like we're heading to deep in the unknown now. Okay. And if you think how this compares to for like 1929, the great crash, there are like several similarities, starting from the massive use of leverage before, then the kind of the Fed tightening and the economy slowing. So the question is now what it will take for the investors to lose faith. And I don't think it's much. I don't know.
Yeah. Well, we're the tincture of time, Thomas.
Yeah, that's true. And one more interesting thing about China is this is global private non-financial debt, basically all new money, in the world, because money is created from bank loans.
Right.
So, and the blue line is the total with China, global debts total, and the red line is total without China. So China has created, if you calculate the difference, China has created about 60% of all new money created since 2009.
And they want to be a reserve currency.
I don't know what they want to be, but this is China has dominated the world economy. That is the point here.
Okay. I say we ought to have a conference in Taiwan soon so we could, have a front seat.
Yeah. Yeah, anyway, definitely. But, yeah, front seat for many things, I guess.
Yeah. So, thank you for showing some eye-popping charts today, buddy.
Thanks. Yeah.
Really some things that, and I thought you might go and talk. I've been talking about China. I'm pretty convinced after the last year and a half that besides trying to manage a crisis, they're also looking at the fallout could weaken other countries that are adversarial to them. Just
they know it will happen, but the risk is that they are I think they're calculating the risk that can they manage the slowdown enough. What happens, because there are internal risks, like the political balance, and there's all those.
Well, I mean, that's why they stocked up. Someone told me they have 50 to 60% of all the above ground grain supplies stockpiled.
Yep. Yeah.
Right.
So because you get revolutions when people get hungry.
Yeah. I get crabby.
Yeah. Okay. Maybe you're not. You're not the revolutionary type then, I guess.
I get that. Yeah, hypoglycemia. I get that low blood sugar. Stay away from me, man. Yeah. Anyway, Thomas, it was fun and compelling hanging out with you this morning. Thanks a lot.
Yeah, nice to be here.
And we'll catch up again at our next quarterly report. Yeah,
we could have another one like in December. Then we know what has happened.
Okay. Yeah. I think I have Dee's book, but I'll get you in early Jan.
Okay. Yeah, that's fine.
Okay.
But right. Invest safely, because now we're getting in the really the choppy waters here. That's the point here.
All right. Well, be safe. Spread the word. Help as many people get as prepared as you can be in an environment like this, and at least preserve some of their financial assets anyway.
Yeah.
So thank you, buddy.
Thanks.
You're my trading warrior brother, Tuomas Malinen, and you could follow Thomas on Twitter at MT Malinen, and your website address. Maybe he left. Okay. Well, you'll find it. It's on his Twitter handle. So everyone have a great day. Remember, don't just count your crises, count your blessings. And you never know if you have faith until you need it. Adios.